Hi traders, welcome to this video on long-term forecasting of this new decade in 2020. Looking forward to take a look at, of course, euro dollar, Forex pairs and currency crosses, gold, Bitcoin, Dow Jones, DAX, all of that coming up, and taking a look more at higher time frames, daily, weekly, monthly charts, rather than the usual kind of 1-4 hour videos that we see on the euro dollar, pound dollar, and other currency pairs from Nenet and myself. So a little bit more long term, a little bit higher time frames, and we're going to still use technicals and waves, of course, as you might know me by now. Those are the two main things. Now, when looking at long-term charts, I do think that fundamentals are important, specifically for daily, weekly, and monthly charts. To be honest, it's not my main thing. It's not my specialization, but I will add my 2 cents and some thoughts about that here and there. But this video will mainly focus on technicals and waves, of course, even for these long time frames. All right, we're going to take a look at the next plus minus 6 months here from January to June. Otherwise, after that, of course, it starts to become a little more difficult to forecast and plan that much ahead of time. Above all, of course, wish you a healthy, successful, and fun 2020. Obviously, happy New Year too. And looking forward to a lot of videos and a lot of analysis as well in this year with Elite Currency, of course. Now, before we take a look at all of these charts, we have a lot of things to discuss, but I wanted to make you aware of the special offer that we have here. There we go. For another 8 days and 7 hours, there's a 30% discount on Live 2020. What does that mean? ECS Live, our premium channel for our members with live trading setups and ideas, analysis, webinars, videos, all of that in one handy spot on our Telegram channel. It's 30% discount for the next 8 days here in 7 hours. So if you're interested, you can join and be a member for an entire year and save more than 300 euros, I believe, or something like that, 300 exactly maybe. So hope to see you soon as a member. And if not, of course, feel free to browse our new website, new design since beginning of last year. You can check out services, Forex and CFD, and perhaps you like something else. Nenet has, his famous CAM-MACD system, obviously, based on MACD, ATR, Camarilla, bands. I have my SWAT based on fibs, moving averages, and fractals. We have ECS Live, if you're not sure. And on top of that, if you're looking for a more automated way of trading, then we have that too. Ultima automated trading system, fully automated from that perspective, and at no cost, only profit sharing. So check out any of these here. Just go to services and Forex and CFD. But if you're interested in that discount, check out that 2020 offer once again. For more information on that. There we go. Now, with everything behind us, let's take a look at the charts, euro dollar, first of all, and looking forward. Once again, this is forecasting, so it might be less precise. Sometimes I'm not sure either because we're looking at a long time frame, so be patient. If this is not your cup of tea, just look at the next video, and of course, there we'll have more concrete trading ideas. I personally trade on a 50-minute chart, 60-minute and 4-hour chart. So that's where I have actual trading kind of ideas. This is more like forecasting waves, just kind of getting a sense about what the direction, what the trend could be, what kind of patterns are saying about kind of the next steps. So it's just to kind of get a kind of a general global perspective, not necessarily a concrete kind of step or trade. That's something we do on lower time frames. All right, let's start. All right, let's start with this euro dollar. Basically, we are looking at a bit of a mixed picture because there are a lot of fundamental bulls out there, a lot of traders that think that the dollar will increase and this euro dollar trend will decline. But the price action in the last quarter is not confirming that. We see 2 bullish candles in a span of 3 months, 2 strong bullish candles, in fact, with the candle highs closing near the high, basically indicating strength of the bulls, and previous month, in fact, closing above and clearly pushing through the resistance of the highs of 2 months before that. So we're looking at bull control from a price action point of view, and we see the HMA is up as well. Those things are not everything, but they do indicate the potential start of a bullish swing up and the end of this bearish swing down. Fundamentals might not seem to fit, but that's what I see from price action at the moment. Price falling from 125.50-ish to about 108.50-ish here, about 1700 pip decline, and that swing starting to seem like it is indeed over. Now, what kind of fundamentals will fit to make that happen? I'm not so sure, because indeed the EU economy is not doing that great. The US economy is doing slightly better. So that, from that point of view, from a fundamental point of view, might not make that much sense, in fact. I thought a year ago that the US would go in a recession by the end of this last year, in fact, in the last months, and that could kickstart a euro-dollar upside, and as the recession spreads, a euro-dollar downside, right? That's something we've seen before with the euro-dollar here, in fact, up and then down. That hasn't happened yet. Maybe because the trade war wasn't as strong, and maybe because the Fed decreased the rate, in fact, instead of hiking it. Let's not forget, a year ago, everyone was talking about rate increases, 3 of them perhaps. We didn't get that at all. Instead of 3 increases, we got 3 decreases, I believe. So the Fed did respond quickly to weakening data. And the US hasn't been that weak in the last months, I would say, right? It's kind of stabilized, maybe improved a little bit. So that recession risk of about 35% a year ago is, I think, lower now. And the Fed maybe helped combat that with its decreases rather than its increases, what everyone thought a year ago. So things are not that gloomy in the US for the moment. The bull cycle has lasted long. So eventually some recession is likely, and that could send the euro-dollar up. But I'm not sure if that's going to happen in the first half of 2020. I don't think so, to be honest. Maybe the second half. Maybe if investors are waiting for a new US elections, that could bring a kind of hesitation that might slow things down. And that could happen, throughout 2020 as we get closer to the elections, but not right away, I think. Anyhow, I'm not sure what fundamentally could make it go up, but it looks to me like this swing, 5 waves up, ABC down, and there could be an ABC up. Alternatively, if it's a bearish scenario, this could be ABC down. In both cases, immediate price movement to the upside, I think, is likely either for a retracement and then down, or for a stronger move up. So let's see if that happens. We got an HMA up as well. Most of the time when the HMA switches, a new swing is likely. When you look back at the past, you see that HMA up, down here, that most of the time if it switches, it indicates a bigger swing. Now, not always. We had a couple of times here and here where the HMA was temporarily or short before price switched again. So it's not everything, but it is, I think, a decent signal that a bullish swing is likely. Price bounced from a technical point of view at the 78.6 fib, as you can see. So the question is this a retracement for more upside like that? Or is this just a bounce for more downside? Or do we get maybe some kind of triangle pattern and then a break up or down? I don't have a clear favorite. Personally, I was leaning towards an ABC up in the past, but I must say that I am now neutral at this moment. What I do think is this upside is likely, and depending on how price moves up, strong, with momentum, or weak, shallow, and is bouncing soon at resistance, that will depend and give me information about what the next step is. Okay. For the moment, I think that a move up to 115 is likely, the 38.2 fib. And if it stops at any of these 3 fibs, then it could easily be an ABC zigzag. Okay. Whereas if it moves up stronger and hits the 78.6 fib, specifically in a 3-wave pattern, then it is likely to be some type of triangle, A, B, C, D, E, and up, or a bearish triangle, A, B, C, D, E, and down. Whereas if it goes to the 88 or previous top, it could easily be some kind of ABC flat. Or if it breaks this top, of course, then it could be a full uptrend. How price moves will say a lot too. So if there's strong momentum followed by a flag, upside is likely. If price is moving in an ABC, then and hits the 78 and bounces, then downside is likely, at least to test the previous bottom. If price moves up slowly but surely and then hits one of these fibs, well then downside, a full zigzag is likely. So it really depends on what type of price action we see here to understand what the next step could be for the euro dollar. For the moment, upside is likely. Also, when considering this price action, I think space up to the 38 at the minimum, I think will take place. For now, though, price is making a little bit of retracement. I would expect price to bounce somewhere in here or 111.50 to move up to 112.70. And that's the next decision spot. If there's a flag, then upside to the 38 is likely. If there's an up and then a strong down, then I would expect an ABC down. And I would expect the head and shoulders to kick in, price to go back to 110.50, 110, and then move up to 38. And that could be a bouncing spot for downside at that spot. So something like this, some corrective pattern to the upside, I think, likely for the euro dollar if it bounces at this 23.6 fib. If there is a flag, then a clear breakout, I think, will take place to the upside. Okay, all of this would be out of the window if price is breaking through this bottom, basically. In that case, downtrend continuation, very simple, basically. And I would expect price to fall further to, basically 107.50 probably. I would put back this fib for the moment. Still be careful of the 78 at 108.10, I think it is. And the 88.6 at 106, but certainly more downside likely in that case if it breaks through this bottom. Okay? And in that case, my bullish kind of scenario and price action is invalidated. All right. So for the moment, leading towards a mild upside on the euro dollar for the beginning of 2020. Pound dollar too, because of the double bottom and what looks like a ABC pattern here to me. So it could be a bigger A, B, C like this, and with a B, C within B. So I'm expecting 5 waves up to complete red wave C and potential wave 4, and then a downside at around the previous top for a wave 5. And so 5 waves up here, and then a turnaround and reversal for a move down is likely, I think. If price moves way further than this top, then it also could indicate that a wave 5 has been completed here, and we're in a new uptrend in that case, okay? So in that case, price might move up way further. For the moment, just expecting a simple 5 wave up. Let's take a look at the weekly chart. And I think that this could be a wave 1, 2, 3, for instance. This could be a 4. If we see a triangle here and a break of the triangle, I think price can move up from 132.50 to 140 and retest the previous top and then fall down again. Something like that, up and then down, likely on the pound as well, just like in my view with the euro dollar. All right, so looking for a triangle pattern basically or a flag to indicate consolidation on this pound dollar. If it does move lower, I'm not too sure. It could be a head and shoulders pattern. It could be that this is a wave 1, 2, and then up for 3, and then a 4, and then a 5. That would be kind of the alternative scenario if price breaks below 129 and starts to move lower. But in that case, I would still be very careful of this support zone at about 124. Put the fib back on this. And I think there could still be a bounce at 125.50, 125, due to the 61.8 fib and the head and shoulders here, inverted one for upside in a 5-wave pattern. All right, and then of course, if it hits this resistance, once again, there could be a big downside. All right, dollar yen. Now, dollar yen very much slowing down, going into a very strong long-term consolidation zone. And there was, of course, very, very big 5-wave up at the beginning of last decade, 2010 to 2014. Then we had some significant slowdown as price action made smaller and smaller swings. And this triangle could break to both directions. This could be A, B, C, D, E for upside. But it could also easily be A, B, C, D, E, and then down to complete a bigger ABC like that. I don't have a favorite necessarily. I think it could do both. For the moment, though, whether this is an A, B, C, D, for instance, or whether this is A, B, C, upside and then downside is likely. And in fact, again, upside after that. It's funny enough. Because it could be wave 1 and then 2 like that. So up, down, no matter almost what the patterns are, seems likely at this moment. So main message here is consolidation continuation, I guess, for at least 6 months probably. Doesn't look like the yen is really going to be a big factor for the moment. I don't know, I might be wrong, but it looks like a consolidation, and it looks like the consolidation will continue to me. No matter what, whether it's bearish or bullish, I see that price is likely to move up, down, and then up, down again. So from that perspective, let's put the fib from here to here. I expect an ABC pattern like that up to the 78.6 fib at 115. Then ABC down again to 107.5, then up again to 113, then probably down again, maybe to 110 or something like that. So contracting triangle like that should make higher lows and lower highs. So looking at lower time frames, I expect this to be a wave A, down for wave B, and then a push up to the 78.6 fib 115. That could easily happen, of course, in the next months. Euro yen, I think, is also a triangle. I'm not sure which direction. We'll probably follow the dollar yen. I would lean towards this being an E finish with an A, B, C, D, E. No, that's not possible. Sorry. A, B, C, D, E, like that. Sorry. That's the kind of triangle I'm looking for. So I'll push up and then a pullback probably for wave 1, 2, and then up for 3. I'm leaning towards this, but in reality, it will follow the dollar yen probably, of course, in its triangle. So if the dollar yen moves up, then the euro yen will move up. Then it depends on the euro dollar. If the euro dollar is an upside, the euro yen will move more, of course, than the dollar yen, and vice versa. But I think that here too, we have the HMA up. We had some pretty strong price swings up and down. And with clearly higher lows and lower highs, I think that this bearish swing is likely to be finished, and I would expect a bullish swing after a correction up to retest these fibs. So let's go down to the weekly, put the fib from here to here. And I expect price to make one more push up to 124, but then eventually I would expect a correction, an inverted head and shoulders, and then a push up again, probably to the 78.6 fib at 132. I would put the fib from here to here. If it does hit the 38, I expect it to fall to the 61 and then up again to the 78 and minus 100 target. So up and then 3 waves down and then probably 5 waves up for the moment. Most likely scenario, I would say, on the euro yen. Pound yen, I think we'll follow the pound dollar. We had an ABC here, ABC here. Looks like 5 waves up for the moment to retest the previous tops up in here. So it looks like a wave 1, 2, 3. A triangle pattern could confirm wave 4 up. It goes if there is a break for wave 5 to complete wave C at the previous tops. And it could complete a bigger ABC. Now that actually would be more of a bearish scenario than the other yens. So if it does break above this top, it doesn't have to be an ABC. It could be a wave 1, 2, 3 as well, but it would really have to push above these resistance levels to confirm a wave 3. Otherwise, an ABC is still more likely, and it will probably follow kind of the ABC pattern on the pound dollar for the moment. So, but in any case, whether it's bullish or bearish, an upside after a triangle for the moment, most likely I would say on the pound yen. That I think in the intermediate near future is kind of the expected move for a push up into the previous top, and then big decision. Breakout, then of course there will be an uptrend, a flag, then an uptrend also likely. But if price really starts to fall a lot from that previous top, then a reversal is becoming more and more likely. All right, let's move on. Let's take a look at some of these other currency pairs. I wanted to take a look, for instance, at the euro pound. Now, I should add, of course, that the pound will be impacted and influenced, obviously, by the Brexit process. I'm not even going to comment that because, you know, these have so many twists and developments from a day-to-day basis that I don't even want to think about what could happen in 6 months. So many things, probably. I will not, focus on that. I'll just keep it to the to the technicals for the moment. Obviously, though, of course, the Brexit process and fundamentals from that point of view will have its impact also on the euro pound. But I'm not really going to comment on that. I think it's just too difficult at this point. But from a technical point of view, the euro pound to me looks like in a 5-wave here. I think that looks like 1, 2, wave 3 here with a 1, 2, 3, 4, 5 in 3 like that. This could easily be a wave 4 with an ABC here in wave 4. So let's put the fib on the wave 3 there. ABC pattern here brings price back to the 144 EMA and the 38.2 plus 50 fib zone. So if price bounces here, that could complete the wave 4 and start the wave 5. As long as price stays above the 50 fib and the long-term 144 EMA close, then I think it's still in a bullish scenario for a potential 5-wave up with minus 272 target as the main target there at almost parity. So, and that of course could also be a bouncing spot. So let's see if that happens. If it breaks through the 50 fib, something else is going on, obviously. And this could be maybe a bigger bearish correction lower. But for the moment, I'm bullish and expect a push up and just a bouncing spot for upside. Let's see if that happens. Dollar CAD, I think, is really a mixed picture here. I got some fibs sailing here lower. I'm not sure why, but anyhow, bit tough chart. But ultimately, I think this looks like ABC. This looks like a correction. And I think it's breaking through the support trend line. It's clearly balancing off resistance, though. And I think that this could be maybe a W, an X, and down ABC for a Y. And I think that it looks like it's about to break through support, in fact. So I would expect downside, maybe a break, pullback, continuation for the moment to go down maybe to the minus 272 target. That could be a big move, but something like this, I think, could take place and then upside again. Looks like a bigger kind of correction here on the dollar CAD. Now, it's not my favorite pair. It's a tricky pair, I think. So that's not an easy kind of spot here on the dollar CAD. There is a potential head and shoulders level as well here. So you got to be careful of that and take it step by step. But ultimately, I think that it is looking like it's breaking through the double bottom. Now, the other alternative is that this is some kind of flag as well. So if it does break above the resistance, of course, that could change things. And then there's space up to the 78.6 fib after price bounce here at the 61.8. So although actually at that time, it would be a different fib. Hang on. Yeah, it was still 61.8 fib. But anyhow, so breakout here wouldn't necessarily ignore because it could be a bull flag, but for the moment it looks like it's breaking through support, and I think that there should be momentum lower, kind of consolidation and a follow through to at least the head and shoulders level, if not to the previous bottom, and then if not even further than that. That's my view on the dollar CAD for the moment, unless it breaks this flag and then there's a space up to 141. Dollar Swiss franc is in consolidation zone. Of course, it was on a massive downtrend here for a long time. Then we had ABC up, a correction due to the Swiss National Bank letting go of the peg, then a move up again, and then a consolidation zone like that. So for the moment, it looks like it's breaking through support, but yeah, a little bit of downside may be possible, but I think it's going to be a slow mover still. I don't see that changing this year necessarily. It might retest the previous bottom, but then bounce again and stay in a range mode, basically. That's my view. Australian dollar, US dollar, has either completed some ABC correction or maybe a double zigzag like this, ABC, X, ABC for Y. No, sorry. That would be like this. WXY, sorry. Like that with ABC in it and here in ABC. Or a 5-wave pattern. I'm not sure. But in both cases, a bullish turnaround is likely. Just like with the euro dollar, I see bullish price action and I see HMA up. And I think that the bearish swing here could be finished. And there could be some bullish retracement to the upside. And then how much? Well, it's always difficult with reversals to estimate that. But it looks like there's some decent space to the 144 and the previous top. And let's see how price moves up. ABC seems to be the minimum for the moment. I know it's risky to call, reversals in advance like this, but the dollar seems like it's going to go into some, to me, it looks like it's moving into some retracement territory at the least for some dollar weakness at this moment. And Australian dollar is kind of confirming that. So we still need a little bit more confirmation. We have a break. We have some bullish price action. Obviously, if price were to make some more confirmations on lower time frames, like some flag here, for instance, or a move up and then a flag, and the next break, of course, would only aid that particular perspective that this could be a wave 3 up. Of course, the more information, the more it's confirmed. But for the moment, I see this as a bullish bouncing spot, and any flag I see as a bullish continuation spot as well. All right, gold is an uptrend, but we got to be careful because if we look at this monthly chart, it looks like a wave 3. There was a clear ABC, but that wave 4 seems short compared to wave 3. And waves 4 are typically long, lengthy, choppy. I don't think the wave 4 is finished. I think this is an ABC for an A. This is an ABC for a B. And I would expect 5-wave down for a C to complete a bigger wave ABC within the wave 4, and then finally the uptrend to continue. So if this is an ABC, then in that case, we have to put the fib from here to here, like that, and also put the fib from here to here. And what we'd expect, typically, if this is a triangle, price could bounce to the 78.6 fib, A, B, C, D, E, and then break to the upside. Or if this is a flat, then it could go up to here, then bounce 5 waves down all the way to the previous bottom, plus minus, a bit less, a bit more, and then bounce up again to complete the wave 4. So for the moment, if this is an ABC, there seems to be space in this C to move up to complete the bigger wave B at a higher spot, somewhere up in here between 1730 and 1920, and then bounce down again. That seems likely. So for the moment, $200 to $400 upside is very possible and likely for the moment. And after that, a move down again to complete the correction, and then in wave 4, and then upside finally. So looking at lower time frames, I think that this is the A, this is the ABC for B, and up with C. Within C, there could be a wave 1, 2, 3, and this could be a 4, 5. Now, question is the 4 finished? Maybe, but maybe not, because this could easily be an A, B, C for an expanded wave 4 as well on the daily, and then a 5. So that depends a little bit on how price responds to this zone. If it bounces, it could be an ABC, ABC, and then down like that. If it breaks this top, of course, then wave 4 is probably completed. 1, 2, 3, 4, 5, 4C. And up it should go towards the 1700, 1800, or 1900 for the moment. And then Dow Jones, we got uptrend, full uptrend, of course, since the Great Recession in 2008-9. It has climbed from 6,000 all the way up to 28.5, more than that, almost 6 times as much, with a clear momentum, 1, 2, probably a 3, 4, and then a 5. Within 5, there is a 1, 2, 3, 4, 5. So it could be wave 5 of 5. 30K would be a very kind of round, natural level for price to move up to. And clear ABC pattern here, up, correction, and some volatility upon the breakout. As we see here, this was the ABC, so we had a push, pullback, and now a clear breakout. As I said in ECS Live, this breakout is different than this one or this one. Here, this was a wave B. This was a simple pullback because of the big top. And now the price is above it, we should see a follow through. And that's what happened. And we should see a follow through that goes way further. And that's indeed taking place. So I don't know what the next target is. 30K is a natural round level. And I expect price to move up there. And maybe, just maybe because of the US elections, there could be maybe a kind of a bull flag pattern before that. Depending on who wins, there could be just a uptrend continuation or maybe finally some bigger ABC correction later this year. I don't know. For the moment, wave 5 and 5 is likely. For the moment, the bulls are in control. There is still, I think, space to the upside. But it is a potential wave 5 of 5. So eventually a bigger correction could take place, even bigger than this correction or this correction. That risk remains on the table, but does not seem that likely to take place in let's say, the next 3 months, or maybe even the next 6 months. That's my view, at least. Then we have the DAX, German stock index, of course. Well, also uptrend, but it didn't break the top as yet, but I think it will and follow the Dow Jones. For the moment, it looks like 5 waves up too. With here, we got, sorry, can't see much beyond that. It looks like a wave 1, 2, 3, 4, 5 as well, 4, and then another 5. If it does bounce here, it might be ABC, ABC, C, and then up again, but I think it will break this top. And if that's the case, it looks more like that the fact that ABC was completed here for wave 4, 1, 2, and this looks like a wave 3. So if it breaks, it's more and more looking like a wave 3. After the break, I would expect a wave 4 flag pattern and then up for wave 5 on the DAX as well. Last but not least, still a quick look at Bitcoin. All right, this is Bitcoin versus the USD, and of course we had a year ago this strong move up, then a very, very deep retracement, which is, you know, very typical for Bitcoin, in fact. Then we started a new rally, and well, I thought it would go a little bit deeper than that. It did show some good momentum, but ultimately the retrace started quite soon and has been deep and lengthy so far. And it's been 6 months since we had a new higher high. If we don't get a clear bullish candle this month, then I think it will still move lower and test the 5K. If we do have a bullish month, then I think there's still a chance of a bullish trend continuation if it breaks above this resistance trend line. And there's still a very small chance that in that case, that price will continue with the uptrend to retest the high. That chance is decreasing. This month is the last chance. If it doesn't do it this month, I think a triangle pattern is likely. It move down to the 5K, then it bounce up and it bounce down to make an A, B, C, D, E triangle, and then bounce and break, and finally move higher for a uptrend continuation, and maybe finally break that all-time high there and make a new higher high. If this triangle pattern takes place, then we're looking at 2020 maybe being a triangle year for Bitcoin, and maybe finally 2021 for a new high and a new uptrend. I don't know. I'm not a big Bitcoin expert here. I'm just looking at technicals and not considering any fundamentals. So I'm, not that into the Bitcoin charts as I am with the euro and the pound dollar and other currencies. But this is my best guesstimate. If there is still a strong monthly candle this month, I would still consider the chance of an uptrend in the beginning of 2020. Otherwise, I think that the structure is still bullish, and I do think eventually this will break to the upside and break for a higher high. Into a consolidation zone, it might take some time. All right, so I don't know. That's my 2 cents on Bitcoin, BTC versus the USD at least. That's about it. Once again, these are just forecasts, long-term kind of thoughts. So it's not as concrete as ECS Live is, and that's where we have trade setups on lower time frames, more concrete, and we have a special discount. Once again, 30%. Join us for 2020, the entire year, as a member. And well, if not that, then check out CanMACD or my SWAT or automated trading. All of that is available. In any case, hope to see you in the next video with the euro dollar and pound dollar from myself or from Nenet with his Monday trading ideas. Wish you a very healthy, successful, fun 2020, and see you very soon. Good trading. Cheers.